Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, Lecturer Finance at Institute of Business Studies, Kohart University of Science and Technology. The title of this course is Intermediate Accounting and the course code of this subject is BS 363. This is lecture number 9 and the topic for today's discussion is bonus share and accounting treatment. The outline of this lecture comprises of the following agenda points. This is to express that after listening to this lecture, student will be able to understand the following phenomena or concepts in detail. The first agenda to be discussed in this lecture will be the concept of bonus shares in public limited company. Secondly, we will discuss under what circumstances bonus shares are issued. That is why a company is going to decide to issue bonus share to the existing shareholder of the company. Thirdly, we will discuss effects and objectives or objects of bonus share. That is, what are different effects we need to notice on the financial statement after the issuance of bonus shares, and what are the certain objectives of the company and as well as the shareholder which are going to be fulfilled after the issuance of bonus shares. Finally, last but not the least, in this lecture we will discuss the advantages and disadvantages of bonus share with the perspectives of not only company but as well as shareholders. So let's discuss these agenda point one by one. Concept of bonus share. Now dear student, what is a bonus share? By bonus share, this is an advanced course and it assumes that the student are very well aware and acquainted with the idea of public limited company and who are shareholders and how what is the concept of dividend. And under that concept, this lecture as a prerequisite assume that the student is well aware of those ideas which I have already explained in the physical lectures in the classrooms in our initial chapters and discussions. So this is in continuity to those ideas and concepts we have explained in our previous lectures. So now let's discuss what is the concept of bonus shares. By bonus share, it means an extra dividend paid to the shareholder in a joint stock company from surplus profits. It means that sometime a company is going to decide to pay out something as bonus to the existing shareholders because they have accumulated the huge surplus profits, and this extra bonus share could be treated as the stock dividend to the shareholders. Secondly, we can explain that company having huge accumulated profits, it means that the primary requirement for a bonus share to be issued by the director of the company is that the company must have huge accumulated profit much beyond its needs, that after fulfilling the requirement of the existing capital budgeting needs, and if still there is huge accumulated profit left over in the reserves, the director may decide to distribute part of it amongst the shareholders in the form of bonus. And these extra share will be treated as the bonus shares to the existing shareholders. Third, bonus can be paid either in cash or in the form of shares. If the bonus, which is an extra dividend or extra share, paid out in the form of cash, it will be treated as a bonus cash dividend. And if this bonus is paid out in the form of shares to the existing shareholder, it will be called as bonus shares. The second agenda of this lecture, which is under what circumstances bonus share are issued. The first and foremost condition of bonus share issuance is when a company has accumulated huge profit and reserves. The condition for bonus issuance is the director can only and only issue the bonus share if it has accumulated the huge profit and reserves beyond its needs and desires, and then the director desires to capitalize these profit. By capitalization, what do we mean? That these funds are normally placed in a reserve fund or a debenture sinking fund type of a fund, and if they are looking to capitalize this additional reserve which are available into the company's financial statement, then they can issue the bonus share. Now what does this capitalization means? It means that after the issuance of bonus shares, there will be certain accounting entry which needs to be passed in the journal, and later on it has a particular impact on the company's financial statement and particularly on the owner equity section of the balance sheet. After the issuance of bonus share, this extra profit or accumulated profit which is placed in the journal reserve account, it has been transformed into the owner equity as paid in capital section. So after this reserve entry, which we will see in our next lecture, that how this accounting treatment is supposed to be done for this issuance of bonus share. So here we are going to take slight idea about capitalization, and in our next lecture we will discuss the practical accounting entry which will capitalize these reserve profits. So by capitalization means we are transforming these reserves into the owner equity section, under which we will mention the capital stock, and it will get a credit entry, and now this journal reserve fund has been capitalized. So let's start once again. When the company has accumulated huge profit and reserves and desired to capitalize these profits so as to use them on a permanent basis, after capitalization, this part of journal reserve is now the permanent part of the business owner equity section. So this is the first condition. After fulfilling that, we are going to issue the bonus shares to the existing shareholders. The second condition is when a company cannot declare a cash bonus because of the unsatisfactory cash position, its reserve effects on the working capital of the company. When the company has a liquidity problem and it is not going to declare a cash bonus to the existing shareholder because of their stupendous performance, financial performance in the at the end of any financial year, because the liquidity problem is going to be affected. So therefore the director may decide to issue the bonus shares rather than to issue the cash dividend. Third, when the high rate of dividend is not advisable for the reason that shareholder may expect the same higher rate of dividend in future. Let's say if the company offered a huge number of profit as dividend to the shareholders, the same higher rate of dividend will be expected by the shareholders. So this is the main reason that the company is not going to pay them as cash dividend, rather they are going to issue the bonus share to the existing shareholders. Third agenda, what could be the effects and objectives of the bonus share? After issuance of the bonus share, it can have two effects, like it reduces the accumulated profit and reserves available in the owner equity section or in the journal profit and loss account of the company. The overall accumulated profit and reserves will reduce, and secondly, there is a correspondence increase in the paid up capital of the company. By paid up share capital we mean all those shares which has been purchased by the shareholder and those are paid up in full to the company, come up in the paid up share capital of the company. So therefore there is a correspondence increase because we have capitalized the reserves into the permanent part of the capital stock. What could be the objectives of this bonus issuance? Number one, to bring the amount of issued and paid up capital in line with the capital employed so as to depict the more realistic earning capacity of the company. The company may decide to issue the bonus share because they are going to present a more realistic picture regarding the capital structure and the earning capacity of the company. Second, to make the nominal value and the market value of the share of the company comparable. The nominal value is the represented or started book value or expected face value, and the market value is the value at which the share is trading over the stock exchange. Thirdly, to correct the balance sheet so as to give a realistic view of capital structure of the company. After the conversion of journal reserves into the permanent portion of the owner equity section, it gives the realistic view of liabilities and owner equity section in the balance sheet, which has been utilized to earn the profit. Fourth, to pay bonus share to the shareholder of the company without affecting its liquidity. So it could be another objective of the company that they are not going to affect its liquidity. By liquidity, we mean that the ability of the company to pay out its debt obligation when they come due is known as the liquidity of the company. So when the company may decide to pay out the bonus share to the existing shareholders and does not reduce the cash available into the company, it will definitely not affect the liquidity power of the company or the earning capacity of the company. Finally, to bring down the abnormally high rate of dividend on its capital so as to avoid many labor problems such as demand for higher wages. So rather than to pay out the higher rate of dividend to the existing shareholders, the company may decide to offer them bonus shares instead of the higher cash dividend, because the shareholder may expect the same higher rate of dividend. Or another way around, we can say that the laborers or employees working in the organization may also expect the higher wages or the salaries from the company, because if they are going to pay the higher rate of dividend to the shareholders, why not to the employees who are working day and night for the betterment of the company? So this can be another problem, and it can also enhance the agency problem as well in the management and the shareholders. Now we are going to discuss the advantages and disadvantages of bonus shares from the perspective of company as well as from the perspective of shareholders. So firstly, we are going to discuss the advantages with respect to or from the perspective of company. This topic means that what could be the prospective or the potential advantages to the company if they are going to issue the bonus share rather than to issue the cash dividend to the shareholder at the completion or end of financial year. Number first, as no cash is distributed, so the liquidity of the company is not impaired. As earlier I have explained that when the company is going to sanction or issue the bonus share to the existing shareholder, it will not affect the cash available into the company or in its bank account, and therefore the higher the cash level available in the company's financial statement or the company's treasury or into the company's bank account, the higher its liquidity. By liquidity we means, as I have already explained, by liquidity of the company we mean that the company's ability to pay out its debt or liability when they come due. So when the company's cash position will not be disturbed because of the issuance of bonus share, so that ultimately the company's liquidity will not impaired or will not reduce. The second advantage with respect to the company will be the profit or the journal reserve available into the company has been permanently retained into the business by capitalizing it. We have reduced our reserve fund and permanently capitalized it in the form of paid up capital in owner equity section. Third advantage, The company capital of the company as per its balance sheet will be more realistic than it would be otherwise. As I have earlier explained, the journal fund the premium received on the issuance of previous stock, the journal profit and loss reserve or retained earning available into the owner equity section is not more realistic in comparison to the capitalized stock available, which is normally depicted as the issued and subscribed capital in the balance sheet is more realistic as compared to the journal reserve written in the owner equity section of the balance sheet. So therefore the company got another advantage that its balance sheet gives more realistic view than otherwise it would be. With respect to the shareholders, what could be the advantages of bonus share? Number first, the shareholder receives profit without in any way affecting the company's financial position or cash position. It means that although company has paid out the bonus share to the investor, but it does not affect the cash position, or which I can say that the liquidity position of the company will not impaired and will not be affected because of the bonus share issuance. So therefore the company will be able to pay out its debt obligation, and the stock price or the share price in the market will be enhanced, or more positive signal will be presented into the stock exchange. They can realize cash simply by the sale of these shares into the market if they desire so. If any of the investor or shareholder who does not like bonus share issuance by the company, they have the option to go to the stock exchange and talk to the broker by simply calling them and ask them to sell out their share which they have received as bonus shares from the company or from the decision of the board of directors. So therefore within few minutes they can realize their cash by sale of those bonus shares received from the company. So it's twofold. For those shareholders who are not interested in cash profit at the moment because of their tax position, they can hold on the bonus share, and those shareholders which are interested in cash dividend can simply call to the broker for the sale of those bonus share received, and they can realize cash by selling them simply on the stock exchange. The second advantage for the shareholder is they can receive dividend on the increased shareholding. Like if they are not going to sell out their bonus share at the completion or at the end of the next financial year, they are going to receive an increased dividend because their shareholding will increase. Like previously, if they have, let's suppose 100 share into the company, and at the completion of 1 year company has issued them certain number of bonus share, like it could be 20, so their overall shareholding will increase to 120 shares into the company, and at the completion of next year the company is going to pay him or her who is the shareholder with respect to pro rata basis of shares, which means that the holding of this investor A has been increased from 100 shares to 120 shares. So therefore the company is going to pay out the dividend with respect to 120 shares of holding. Therefore the dividend of this investor will increase. The third advantage for the shareholder is shareholders stand to gain since receipts of the bonus shares dividend result in a tax advantage to them as compared to cash dividend. This means that those shareholders who have received bonus share, they are not going to pay out any tax because they have not realized cash. However, for those shareholders, if the company would have selected to pay them as cash dividend, bonus as cash dividend, they were required to pay out certain amount, a certain percentage of that dividend as tax. Like it could be 10%, 15%, whatever the government has enforced legally. However, if they have been issued with bonus share, their overall holding will increase from 100 to 120, but they will not going to pay out a single dollar or single rupee as tax payment in that particular year, because they have holded all the shares, previous one and newly bonus share, and they have not realized cash by selling them out. So they can reduce their tax bracket in that particular year. Now, what could be the disadvantages of bonus share? Number first, capital being permanently increased, because we have capitalized the reserves available into the company. The rate of dividend is likely to be reduced in future. Like for example, company has decided to pay out 1000 rupees or dollars as dividend to all shareholder, and all shareholders are 100 in our case, then overall dividend will be $10 per share. If the company has issued 20 shares as bonus previously and the overall holding has been increased to $120, and at the completion of next year, once again company has decided to give $1000 as dividend, then the overall dividend rate will get reduced, which will definitely be less than 10 in this case. So it means that after the issuance of bonus share, the rate of dividend is likely to reduce in future years. Secondly, it may encourage speculation in the company's share. By speculation means that the experts are going to decide that either the market price of share will increase or decrease, and it will create a huge fluctuation into the market because of bonus share issuance. It may encourage speculation in the company's shares, thus causing a wide fluctuation in their market price. This could be a potential disadvantage of the bonus share issuance. And this was all about the 4 agenda points we have discussed. Thank you very much for listening to this lecture. If you have any question, you can freely ask via email or with the help of KCMS. You can just simply post them and I'll be happy to answer your question. Good luck for the day. Allah Hafiz.